Okay guys, welcome to how to mark your support and resistance lines. Let's say that you are in this trade or you find this thing taking off and you want to jump into this trade and you're wondering, will this run? Now pretend you don't know that it's going to run up here. You just saw this little section right here and you're like, I wonder if I should get into this trade. So you have to mark those resistance lines so you know when it's a good time to get out of the stock. You don't want to get in not knowing if it ran out of gas or not. So what I'd like to do is I like to use the Ichimoku, and I like to go back to the daily where I get to see the bigger picture. So this is what I cleaned everything else out. All I have is the Ichimoku system on here. And when you look at it, you're like, wow, this is crazy. Well, it really isn't, because it shows you the two lines here are showing you the present, the orange is the past, and the cloud is your future. So it practically tells you the past, the present, and the future of the stock, which is really cool because it shows you resistance, support lines, and everything else. And we're going to focus on just one area. Ignore everything except for the orange one. So that's all I'm going to talk about, just one little area. The one area that no one ever talks about, which is more important than anything. And if that's important, imagine what the rest of this thing will do. So here we are looking at the bigger picture, the daily, and you see that the stock is falling. And you're like, man, why anybody wants to get into a stock that's falling? Well, anything that goes up has to come back down. So if it comes down, it has to come back up. So even if it regresses, even a little regression like here, this one is at 320. Ooh, let me get my lines out. If this one's around 330 and it came back to 378, that is not a bad little regression before it keeps falling. So for us, it's just getting a little piece of the pie. So what the chikou span does, chikou span shows you the momentum of the market, shows you your support and resistance lines. It gives you the price of what's going on 26 periods back. So practically it's showing you like almost a month behind is trailing. If you go down to a 4 hour, then it's lower, shorter and shorter. So what we do is we mark all these little spikes. So here's one right here that we know. Technically we really wouldn't know this one yet, because this green one made this one, so we wouldn't know that yet. But it paused here. The spikes are the ones that are really respected. It bounced off of. The flat ones, it means it paused. But something happened to pause those, so we mark them. Now we're going to stop right here because we're not going to go that high. We're going to be working in this small area down here. Once you got the lines marked up, then I go down to the 4 hour. We're going to fine tune this. So here where it came down and it hit support, later on it became resistance. So one area did it twice. Boom. Then you got this area right here rested on. And you got this little area down here. And you got this little top here. This last candle did this little last one here, but the one back here still counts because we didn't see, we were able to see that. And then go down to the 1 hour. That's about as low as I go, 1 hour, because anything less than that you don't really need. 30 minutes is plenty. The 1 hour, 4 hours, and the daily is more than enough of your fine tuning of where your trades are going to be. And here's this one, and here's this one. So we got everything marked. All right, so now we go down to the 1 minute. Oops. And here's the trade that you were trying to get into. All right, so at 9:30 the market opens up, and here is the 1 minute candle starting up. And right off the bat, it hits that resistance line. It's fighting to get through it. Something that was already marked before, it's already fighting it. Then it becomes a resistance. Then it runs up, it hits this line. Breaks through it, no big deal, but it comes back to it. So it's kind of respecting this area, and then it takes bat out of hell. So let's say, for example, you want to get into the trade. So you get in around 190, it starts running, it blew right through this one. It didn't even count it anymore. It keeps going, keeps going, keeps going, and then it hits something. 2, 3, 4, 5, 6. 6 candles, and it's just hitting there, hitting there, hitting there. So let's say you really don't know where it's going to do unless you want to get out. So you got in around 190, you got out around 199, that's a 9-cent run. You're like, well, that's not really that much. Well, believe it or not, it's not. It's not that little. every little piece of the pie that you get is better than nothing. If you buy 1,000 shares, that's $100. You buy 10,000 shares, that's $1,000. So if you have $1,000 sitting here on the table, do you want to see if the market turns around and steals it from you? Because even if you get $300-400 out of this, why will you let it, be thrown away just because you're of uncertainty of not knowing what the market's going to do? Once you know where your support and resistance lines are, it's time to get out. Because especially if it's trying to break through and it can't get through. And eventually what you saw here got through and it got rejected and it kept going back down. So you're kind of going to be throwing your money away if you, stay in it for longer than you need to. So technically what you're doing is marking where it's time to get out. Okay. Now I'm going to show you something else that's really cool. This is the 1 minute. It went up, and even though you don't see it here, it paused. So this is telling you that it paused it respected it. So we're going to mark that. Then it came up here and it respected that. Now we wouldn't be marking these down here. I just want to show you something. All right, so it never came down here, so we can get rid of these. So that way our eyes don't get confused. Get rid of that one. All right, so it came up. It blew right through there. Came back down. It respected the 203. It bounced off the 199. It went right through. It keeps going right through here like it's nothing. It ignores this one. So let's get rid of it. You don't need it. Bounces off the 196, right back to the 2. It respects that, right back down to the 196. It goes right down. It snaps right back into the 190 area. Back to the 196. See, the market is not chaotic. It's telling you what it wants to do. And a lot of these lines, even though this one we marked it here, all these other ones, it was marked almost 26 periods back. It was marked way back there. It's just telling you that it's going back to them because the market repeats itself. It goes through cycles. Now, you have these lines, you don't have to keep them on the chart because technically the cloud is the one that tells you your future. So something that you were marked over here that it respected as a support, the cloud is marking it for the future as just a red line right here, which we're going to talk about the cloud another time. So the cloud has its purposes as the other two, the tenkan sen and the kijun sen that I erased. Everything works together to show you the bigger picture of the stock. So hopefully this will help you on marking your support and resistance lines, and just keep making some money, guys.